What's going on, traders? Welcome back to the channel. It's me, Prince. Hope you're doing well. It's been a while. Anyway, so today's topic, wanted to talk about five things you have to make sure you do, five things you have to make sure you have before you get into a trade. And people have talked about this before, but I just kind of I got a feeling recently. It's funny because it's very difficult for you to know how you felt about a topic before you learned how to do it. Because as soon as you learned how to do it, now you don't really think about it anymore. You just kind of do it in autopilot. And the reason I talk about this in trading specifically is because first time I learned how to trade, my first ever trade was binary options. And the reason I was trading binary option was one, because that was all I knew. And two, because it was very simple. All you had to do was just click buy or sell. There was no risk management whatsoever. There was no money management. You didn't have to do any technical analysis. There was no indicators. You didn't have to do all this fun. You didn't have to back test or do any of that. All you had to do was just set up an account with a broker, right? And all they had to do was just send you trades. And anytime they send you a trade, they say buy or sell. You just had to click buy or sell. And that was simple. So I was just thinking recently, how can I simplify the same trading process, right? After binary options, I moved on to advanced pattern trading. If you ever heard of like ciphers and bats and Gartleys and butterfly patterns, I didn't trade all of them, but they were definitely a lot more technical. They were definitely a lot more profitable for me. Don't get me wrong, I still do trade them sometimes. I mean, I've moved on again to other forms of trading. Now I do more like technical swing trading. But the reason why I gravitated more towards the technical advanced patterns, technical trading, was because it had set rules. It had very clear, specific, unbreakable, non-subjective rules that you had to follow. It says X to A, A to B, B to C, C to D, enter here, exit here, Fibonacci's here, all that kind of stuff was laid out. It was very simple. And I gravitated towards that, and I learned my discipline with those advanced pattern trades. And moving on to technical swing trading or day trading or any of that stuff is a lot more technical. It's a lot more nuanced. There's more chances of you to make mistakes and make it your own. And when I say make it your own, essentially all I'm saying is you can tweak the rules, right? And in trading, if you leave the rules to yourself, you tend to make more mistakes. So I was just thinking to myself the other day, how can I simplify the process? How can I explain it from my point of view to make it very simple? So that's what I wanted to talk about today. So without further ado, I guess I'm just going to jump into the chart and show you exactly what I mean. So the first one, I'm pretty sure you've heard this before. The first rule before you get into a market, before you get into a trade, if you're a swing trader, day trader, position trader, is to first of all realize what the market is doing. What's the direction of the market? Or at least what's your bias to the direction of the market? Two traders can look at a chart and see two different things. And that's absolutely fine. That's absolutely fine. Remember when I was learning under my mentor a few years back, and he would take a buy position, and then I would wake up, I would take a buy position, for instance, and I wake up the next day, get into the live room, and I realized he took a sell position in the same currency pair. And somehow we will both end up winning. That does happen. That's actually quite normal. So anyways, looking at the price chart, usually when you go on the internet or when you go on trading text, this is why I don't recommend trading textbooks. There's no point. I mean, it's not that there's no point. It's just textbook trading is not reality. Okay, and I'm going to show you why. Usually, when you go on in a textbook, it says, if the market is moving from the bottom left to the top right, then it's bullish. If it's moving from the top right to the top left to the bottom right, then it's bearish, right? Cool story, bro. So you would see something like this, and don't get me wrong, that's absolutely fine. It's just it doesn't work in theory, because if you're speaking to a novice and they're looking at a chart like this, and you're saying to them, yeah, I mean, look at this. It's obviously bullish, right? Well, yeah, it's bullish, but mate, it's already happened. It doesn't help me in any way. I mean, if I was looking to identify and write a book on how to read trends, this would be a beautiful uptrend. So bottom left to top right is a bullish trend. Top left, and then you have the reversal right here. if you were to just zoom in a little bit, and if you're just looking at this snapshot on this currency pair, you can look at this and say, yeah, of course, this is in a downtrend because you're moving from the top left to the bottom right, right? Now let's see how that works. Let's draw that out, right? Let's draw that out. All right. So now, of course, fundamentals of reading a price chart is to first of all identify your initial starting point. Initial starting point, essentially where you start reading the trend, because you can't keep going back into the history to keep reading from like 10 years ago. At some point, you have to realize where the trend starts, and then you have to work forward from there. So essentially, and I'm going to show you how to identify this when we look at consolidation. So essentially, the market moves in three ways. There's an uptrend, there's a downtrend, and there's consolidation. Free. All right. So first of all, I'm going to show you the uptrend. So when you go on YouTube, when you go on trading textbooks, when you go in Facebook groups and people are posting, all their wins, it kind of seems like everyone is winning these days. In when you go on the internet, on Instagram, Jesus Christ. Obviously not true. If you're a trader worth your salt, you're supposed to be losing some of your trades. I've been looking for the Holy Grail, haven't found it yet. But anyways, so initial starting point, and then you have your new structure high. Have your impulse leg. After the impulse comes the retracement, which comes next. And then you have the next impulse. And then you have the retracement. Usually in the textbooks, they usually put the retracement coming right back down perfectly to the previous structure support or resistance. It's all structure. So anyway, coming back straight back down into structure, bouncing off it perfectly, and then creating a new structure high right here, and then coming back down, bouncing off the previous level of structure, the previous swing high, essentially. Well, this is all good and well, but in reality, the trade looks more like this. You can have like a mini high, then you have a retracement, then a high, and then you have a complex pullback. What's a complex pullback? Essentially, market doesn't move like this. Market is always going to try to confuse you. So it's going to give you a little retracement. You see, it creates a new structure high. Now, this is our next initial starting point, right? Creates a new structure high, retraces. So this is the initial trend. Creates a new structure high, retraces. But instead of creating the next structure high, it kind of moves sideways and retraces some more. Now, are we in a downtrend now? Well, no, because remember, from the initial example, we came back to retest the previous structure, and technically that's all that's happened here. We just had a more complex pullback. Some people call this an ABCD. Some people call it an ABCDEF. I don't know. I mean, it's just a pullback, people. Don't make it too complicated. So as long as we don't break and close below this previous structure low, this is still a pullback. We are still in an uptrend. But you're never going to see this in textbooks, right? But this is what happens all the time. In fact, anytime the market gives me a clean chart like this, I'm like, wow, that's a really clean chart. And I've been trading for 10 years. Rarely are you going to see this. Sometimes it happens, but when it happens, I'm more shocked that it happened this way than this way. This is more normal to me now. Because the market is never going to give you exactly what you read in the textbook. That's just reality, right? So now we have a new structure high right here. Retracement. You see, this retracement is not even as deep as this one, but it's a retracement nevertheless. And then we have a new structure high, retracement, coming back down to that zone. And then you can actually, just like you can have a complex pullback, you can actually have a complex new structure high as well. So you can see this didn't just move all the way straight up and break the previous swing high. It kind of moved up, retraced a bit, and then moved up and broke it. So these two are just as valid as each other. And I'm going to show you this in an actual chart. But let's just move on. I just wanted to draw this out. Let's just take it bit by bit, right? Now the same goes for a bearish chart. You can see. And this is my drawing skills in action here, by the way. Jesus Christ, Prince. But anyways, you have your initial starting point. Can't be bothered to type this out again. Just going to drag this over here because I'm lazy. So you have your initial starting point. New structure low, right? You have your retracement. You have your lower low, retracement, hopefully coming back to the previous structure. Rarely happens again. Listen, the market doesn't even have to retrace back onto this level, but I'm going to show you examples. Fine. But again, I've seen this so many times now. It's like, I'm saying to myself, well, I'm seeing all these examples on YouTube about market retracing back into the structure level and then just bouncing off it. And I'm thinking, am I trading like a different chart, or is everyone else like trading something different that I'm not getting? Like my trades don't work like this. My trades make me pay for it. Like I really have to pay attention to what I'm doing, because this rarely happens. These kind of retracement where it just comes in, touches your previous structure support. I mean, if it happens, I'll take it, but hey, I have to fight for mine. But anyways, retraces back again, creates a new structure low, and then so on and so forth. And again, just like the bullish pattern, is the same. It's never going to give you exactly what you want. You can see there was a new structure low, outside return, new structure low, a complex pullback. There was a higher high, and then there was a lower low, and there was a higher high again, all within that same structure zone. Technically, nothing changes in this trend until we break and close above this green area, because this is the previous structure support or resistance. I don't care, whatever you want to call it. It's the structure zone right there. As long as that structure zone is respected, we are still in a bearish trend, and so on and so forth. The sun is out. Boy. And now, when this is the one that is the most confusing to me, and I remember this because I could never tell when consolidation was broken and the trend began, which was problematic because the market consolidates about, 75-80% of the time. So when do you actually know, as a trend trader, which I am, or a counter trend trader, which I also am, when do you know? And hopefully you are as well. Maybe you want to be maybe you don't want to be a consolidation trader. I know a couple of day trading consolidation traders who just milk the shit out of these channels. I'm just not that person, right? So if you are a trend trader, how do you know when the trend has begun? Because by the time you wait for it to happen, it's probably already too late, and now you have to wait for the next one, which wouldn't happen for the next 80% of the time. Now, when you look at these textbooks again, the textbook example, all you see is just like zigzags, sideways movements, right? Well, that doesn't really help you because, I mean, this means nothing. And they say they wait for the breakout. Well, okay, cool story, bro. But what if it's not like this clean? What if it's not like this, well placed, like just moving? I mean, look how symmetrical this is. This is more like what consolidations look like. So if you let's just use like a downtrend for example, right? So I can't believe I'm still in the direction of the market. But yeah, this is very important. That's why I'm taking my time with it, because you need to understand this. So market is bearish. We have your initial starting point. Again, I'm going to drag this over here because I'm still lazy. Bear with me. I just came from boxing. I'm exhausted. We have a new structure low, because this is your initial starting point. New structure low, outside return, new structure low, retracement, new structure low. Now remember what I said in the previous example. As long as you get a new structure low, the market has the right to reverse anywhere within that. Now what do I mean? So we had a new structure low here. Market retraced, created a new structure low. We are still bearish anywhere in between here and here. Anywhere in between the previous structure extreme and the current structure. So anywhere within this zone, no matter how much the market wants to move back and forth and do whatever it tries to do to try and trick you, because, hey, welcome to trading, right? But anywhere within this zone, the market has the right to retrace, consolidate, move back and forth, do whatever a complex pullback, A, B, C, D patterns, whatever it wants to do, and it will do that. So just might as well just get ready. But as soon as we break and close below that zone, again, I don't know why I took this off so early. Remember, we were within this zone. And then as soon as we broke and closed below this extreme right here, this immediately moves to the next level. So we're still bearish at this point. So as long as we don't break below this or above this, we are still bearish. Now, in this example, this is how you know when the market is in consolidation, because just because the market breaks above this doesn't necessarily mean that we are now in consolidation. Technically, that should mean we are now in the first stages of an uptrend. Now, if you remember what the uptrend looks like, that was the first example I showed you. But if you don't, just go back, rewind, it's a YouTube video, and watch it again. Now, the market came back, retraced. Instead of retracing and testing this structure level and then going back down, creating a lower low to continue the trend, we broke and closed above the previous structure level. Now, this is the first instance that the market tells you that we are actually looking at a trend reversal. Now, I'm not going to go into detail about if I should take the trade now, if it retraces back to this level, or I don't want to get too complicated here, right? I just wanted to show you how to read a simple price chart. Now we break above this area, we now know, okay, first of all, we are no longer in a bearish trend. So we've eliminated one option. Now there's two left. Now the next question is, well, out of the two, are we in an uptrend or in a sideways movement? Well, we're not in a sideways movement yet. Now, if we are in an uptrend, what we'll be looking for is for the market to create a new structure high, retrace, and then create a new structure high. You have to have that Z shape to be able to confirm that we have now initiated a new trend. Now, again, at this point, I still don't know if the market is bullish, but we do have an initial starting point of something. Could be consolidation or a new uptrend. You have an initial starting point at least. You have a new higher high. You have a retracement. Now, what happens next dictates what my bias is. If we go on and we create a new structure high right here, now we are bullish. Now my bias would be, okay, yes, we are bullish. Now, don't get me wrong. Somebody might look at this and say, well, yes, Prince, but if we broke structure to the upside, like if we broke above this area, why don't we just look at that as bullish? And you could be right, depending on if we had a complex pullback. Remember when I talked about complex pullbacks? If we, instead of having this, let me just draw like an identical. So right now we have something like this. This is essentially the downtrend here. If we had a complex pullback like this, we are still bearish, right? But as soon as we break and close above the previous structure level here, yes, now we are bullish because we have the initial starting point. Let me just zoom in here. We have the initial starting point. We have the new high. We have the retracement. And we have a new high. So as soon as we break and close above, this changes from a complex pullback to a trend now. It's a new trend. So you can actually switch. So your initial bias or your initial analysis can change depending on what the market does. Again, I don't want to get too complicated. I'm actually talking about consolidation here. But instead of this scenario, what happened here? We broke to the upside. We came back down instead of creating a new higher high. So we've already eliminated a bearish trend, and we've eliminated a bullish trend because we haven't created a new higher high. But instead, what the market does is it moves sideways and then creates a lower low. So we went from bearish to potentially bullish to sideways to bearish again. This is when I confirm that the market is consolidating. Now, this can be a little bit more nuanced, right? But if you're a beginner, if you're easily confused like I was when I first started trading, I remember watching this video from my mentor like a million times and I still did not get it. The more simple you make it and you stick with it, the easier it will be for you to, master how to read it, especially these consolidations, because you can actually be looking at a consolidation thinking it's a trend, and then you're in trouble. So this might be a little bit too much to understand on the first watch. I mean, I might have gone a bit too overboard on this one, but reading the price chart, reading the direction of the market is the absolute first thing you have to look at. If you want to be a trend trader, you have to learn how to read the trend. And this is how I do it personally. Now, someone else might teach you something else. And if they do and you want to listen to what they teach you, then by all means go ahead and just do exactly what they say. Do not combine and mix and match and change your bias depending on how you're feeling that day. You can't listen to Prince and do what I do and then listen to Jimmy and do what he does. Listen to me on Monday and then listen to Jimmy on Tuesday. No, stick with Prince or Jimmy. The fuck is Jimmy? Anyways, number two. Number two is mark your structure level, right? Now, how do I read structure? Now, I'm going to show you how I read structure level. I'm going to show you a trade, actually. We're going to jump into the fun bit now. Now, quite simply, if you're going to be looking at to marking structure levels when it comes to a price chart, I'm not going to reinvent the wheel here, okay? If you're looking for a retracement, if you're like a retracement, so if you're looking, let me just, actually, I'm going to pull this up again. I'm going to use this as an example again. I apologize. I know my drawing is not the best, but, you know, it illustrates the point. So you're bullish. So you're bullish, right? You have your new structure high, retracement, higher high. Just like the green bit I drew in earlier. Your structure level is at the previous higher high. So all this in here. Now this is gonna be different if you're like a tick chart trader, or you're like a day trader, or you trade on the 5 minute. There might be multiple levels in there that you might not want to pay attention to. But if you're a swing trader, there's probably less structures that you have to pay attention to. And the major ones they stick out like a sore thumb, because if you zoom out in the daily or the weekly, they usually are there. So I have two types of structure level that I look at. I look at minor structure levels and major structure levels. But I'm not going to get into that today. I'm just going to stick with the main structure level that you can see sticking out as a sore thumb on the daily time frame, for instance. Keep it simple. So your structure levels will be the previous higher high, and if you're in a bearish trend, your structure levels would be the previous lower lows and lower highs. So between the lower low and the lower high, and between your higher high and your lower low. Right? Does that make any sense? Hope it does. So basically between the previous levels that you broke out of. You know, I hate all these like technical terms that just confuses you. Look at the green chart. You understand the reason why we have to take it from this level. This is your higher high right here. And this is your previous retracement, lower low. So anywhere in between here is your structure level. Now this is going to look different depending on what time frame you're trading again, but the sentiment is the same. So I'll show you an example on the chart. Okay, so this example is actually perfect. I went along looking for a different one, but I showed you this in the first few minutes of the video. I showed you a bullish trend and a bearish trend, right? And I said, we are bullish. Let me just zoom out, for instance. I mean, you can also just go onto the daily just to figure out exactly where your initial starting point starts. You're going to come all the way down here. It's quite clear that this is a very major structure level in this market, but you don't have to sometimes. Sometimes you can just start from the most recent stuff that happened in the market. That's fine. But if we look at this example, for instance, right, I already established that we were bullish at this point. Let me just go into the... Okay, let me just start from here. So this is your initial starting point, right here. And we have your bullish move, you have your retracement, bullish move, retracement, all the way. I'm not going to draw this out because it's long. All the way, bullish move, retracement, all the way up here. So now I'm going to pay more attention to the trend, because this is where we actually reverse trend, right? Now from the example I showed you earlier, I said to you, let's draw this out. Now I said to you, if we have a higher high and we have a retracement You can see the way the retracement was a bit sideways. And this is the case in all these examples. You can see sometimes the market doesn't just move straight up. You can see right here, I drew in the blue zones because I was just looking at the main moves. But if we draw in every single move that the market made here, you can see it's not that straightforward. You can see we had a new high, retracement, a little high here, and a big high, and a retracement, and then a little double top, retracement, another double top, retracement, a lower high, retracement, higher high, retracement, consolidation. You see? It doesn't matter because we didn't break above or below that structure level. And then finally, a new high. Some people might mistake this as consolidation, but it's not because we haven't broken the rules that I stipulated earlier. But then coming over here, you can see we have a new high. Again, some more consolidation trying to trick us, right? And then what happened? We broke and closed below the previous structure right here. Now, is this a downtrend? Yes. Why? Because we already went from a consolidation here to now a new structure low, outside return, new structure low, outside return, new structure low. Now, obviously, you have all these minor structure levels in there, but let's just look at the ones that stick out, that are more obvious on the chart. Now we have just turned bearish, just like that, right? And now we have a retracement back into where? The previous structure level. Now, I know you're looking at this thinking, well, where is the structure level, Prince? It's right there. Anywhere in between here and the previous structure level. All right, sorry guys, I apologize. My battery died and I had no idea, and I was speaking for like 20 minutes after that. Jesus Christ, I have to record this all over again. But anyways, anything for you guys. So yeah, anyways, as I was saying, anywhere in between this zone, this green line here, and the previous structure level. So that would be between here and here. You can see market retrace back into that. I found my reason for entry, right? And it was a good trade. I mean, this trade netted about, I don't know, over 200 pips. And if you notice something, this trade looks nothing like the little picture I drew initially. Like if we go back up here, you can see it looks nothing like this. Do you see how the market came back up, retraced, gave me a reason for entry, came down halfway to my target, came all the way back up to entry. This is the nature of the forex market, at least, because that is what I trade. Rarely is the market going to just retrace and give you, just hand you money. This rarely happens. Rarely happens. Maybe out of 10 trades, it might happen once or twice. Yeah, that's rare because I'm a swing trader. I rarely take trades to start with. Not rarely, but a few more trades than some of my day trading competitors. But anyways, you can see halfway through came back to entry. So just reading the price chart is one thing. Just sitting through all this bullshit like back and forth is something else. But anyway, I digress. You can see market came back down, give us a new structure low, retrace back up into where? Previous structure. And then we broke to the downside again. Now, this is the next trade. This is where I want to talk about my reason for entry now, which is point number 4, right? Reason for entry. Let's adjust that. There we go. My reason for entry is double tops. Now, yours could be different. Yours could be a particular candlestick formation. Yours could be, I don't know, like a 5-wick candle. Yours could be whatever. Now, the reason for entry is it's not irrelevant, but it needs to be consistent. I don't know if I've said this already because I feel like I'm repeating myself, and I have because my camera died. But it needs to be consistent. You can't do one thing on Monday and do something else on Tuesday. You can't listen to me on Monday and then listen to Jimmy on Tuesday. You need to either do what Princess or what Jimmy is. It's either me or Jimmy, essentially, is what I'm trying to say. But anyways, my reason for entry for this particular trade, right, was a simple double top formation. That was my entry. That was it. That was my entry reason. And I'm not gonna get into too deep about how to read a price chart, or um, I'm not gonna get into deep about how to read a price, not how to read a price chart, how to read a double top or a double bottom or any stuff. I'll do that in another video. But essentially, the point number 3 was find your reason for entry. If it's a double top, if it's market being oversold, if it's a particular candlestick formation, make sure you stick with that. And that segues me perfectly into point number 4, which is stops and targets. I never take a trade that doesn't give me at least a 1-to-1. I know you've probably heard this before, but first of all, let me show you my stops and target placement. So sometimes I see people place their stops right here. Now remember, we already talked about where the structure level is. We already talked about where the market has the right. I mean, the market has the right to do whatever it wants, but if it's following the rules for the trend, it doesn't have the right to break out above or below the previous level of support. We already talked about this, right? So as long as it's still within that area, then technically we can find the reason for entry. And my reason for entry here was a double top, and my stops has to be above the previous level, because again, market has the right to retrace all the way back up to here, and it will still be a bearish trend. Now, my target is the same. My target is a little bit different, but my target is just before we hit the previous new structure low, which is all the way down here. You can see I drew in the structure level. We came down, retraced, came down. So just to keep it simple, just to recap, the stops are placed above the previous structure retracement, and the targets are placed just before the new structure low. Just like in this example. And the reverse will be the case in a bullish market, of course, in a bullish trade. And then finally, you can see this was a nice 213 pip winner. And you can see, again, it was a good entry. But did you see the market just reverse and give me exactly what I want? Of course not. It had to move sideways, move towards my target, move back into stops, move towards my target, move back into stop. And it finally, I don't know how long this trade took. Now, if you're going to be a swing trader, you have to be willing to strap on and just hold on for dear life for weeks, because this trade took exactly just about a month. But it was worth it, because, I mean, hundreds of pips just for one trade, right? It was worth it. And so brings me to tip number 5. It's just patience. And I think I already touched on that, because, I mean, this one trade here took almost a month. And this is not just, place your trade and, just look away and just never look at it again. We are all human beings. We all have that habit of just going to look at our trades and making sure everything is okay. See if there's a way we can tweak it, or we can make it better. Or we can take half targets, partial targets here and there. Just stay strong, stay patient. Because if you're not able to stay calm, all this I'm saying is bullshit. Because believe it or not, you're going to trade this and it will not work every single time. If you are any trader worth your salt, no one strategy works every single time. You're going to have, winning times and losing times. You're going to have times where everything just seems to be turned into gold, and you're going to have times where just nothing is working. I had one of those weeks last week. Every single trader was just like shooting me in the face. So just stay strong, just stay patient, just trade through the drawdown, because they will come. They will come, unfortunately. Stay off social media. Stay off these trading gurus, Pipmaster God 192, in the Facebook groups, talking about him making £1 million a day, only posting wins. Sometimes you have to be brought back to earth, because even if you're not the one taking those trades, you feel like you should be that way as well. So when you don't end up making that much money, or just getting 10 wins in a row, or never taking a loss, you feel like you should quit and you should try something new. So just, if you would just take what I just showed you right now, go back test it, get your numbers. When I say your numbers, I mean your drawdowns, when are they going to happen? If they do happen, what is the scenario looking like? And just stick to that and just trade it. When the drawdown happens, stay calm, stay patient, and just trade through it. So anyways, guys, that will be the end of the video. If you like the video, of course, just give it a like, share, send it to someone. Give me any questions, just put in the comment section below. And if you want to speak to me one-on-one, I've got my calendar link, as usual, in the description. And guys, I will see you in the next one. Peace.